And good afternoon, and welcome to the Short Vol Show Live, the Short Vol Show / Meat Alternative Show Live. And we are in the wake of the Fed announcement, the Fed cutting a quarter point. I came on to answer some questions. Plus, we're going to look at our UVXY position. 1 day into selling naked calls, UVXY is up big. So we'll see how that worked out, and we will see how we're doing in BYND. That coming up next. I'm also going to answer this question that somebody just posted in the StockTwits forum about why is BYND, when you look at the puts, why do they look like they're priced so wrong? Why are they so high and the calls are so low? If you look at the money, usually in a normal stock, at the money strike, the puts will be about the same price as the calls, but not so in BYND. We'll talk about why coming up in just a second. Commercial break. All right, and we're back. So first, let's go to BYND. Today BYND, we saw it up over $10 at one point. After closing yesterday, kind of down in the dumps. We rallied, so we got all the way up in BYND to almost 207 on the chart. Let's take a look at the chart. We'll get rid of my bookshelf here. And just to the left of me is the chart. And that top point's 207. Now we're trading around 198. And what I ended up doing, which was a little scary, was I ended up getting short once we rallied up here. So once we got around 202 about, I got short, and I did that by way of a spread. So if we look at my trades, I have a lot of trades today, but if we look at my trades, I did buy this spread. Actually, I'll go to the option screen to look at it, and it was the August put spread, the 195, 185 put spread. I did buy that 12 times, and I paid 5 something for it. You can see my positions here on the screen. So I did buy the 95-85 put spread. I bought it 12 times, and then it went completely against me. It showed me short 100 deltas, rode it all the way up, rode it back down. Then with stock right around here, I sold the 190-180 put spread against the put spread that I had bought to lock in a nice condor at good prices. So now I own the 180 puts and the 195 calls, and I'm short the 185. I'm sorry. I own the 195 puts and the 180 puts, and I'm short the 185 and 190 puts now in BYND. And like I said, it showed me short 100 deltas, and so it was a little nerve-wracking on this little rip to the upside, but things did come back down. Now, just let's go to UVXY quickly. Oh, before I talk about that, let me answer this question about, wow, the puts really look weird in BYND, and indeed they do. Let's take a look at a front month chart. Front month option screen. Now, usually when you look at the money strike, you should see like the calls and puts should be pretty much around the same amount. Maybe just the difference in interest rate to carry that strike out however many days it is. I'm looking at this front week, so there's almost no interest. But if you look here, the puts, let's take a look at the 197 strike. The calls 530 bid at 570. The puts 840 bid at 880. Now, why is that? Well, it has to do with the hard to borrow issue. Now, when you buy a put and sell a call on a specific strike, that is called trading the combo. When we buy a call and sell a put, that's very similar to buying stock. The only difference is you don't have to worry about hard to borrow things with the combo. You don't collect a dividend, and you can't get bought in. So, however, as we know with this stock, it's a hard to borrow stock. Now, think about how that sounds, hard to borrow. That means it's scarce. That means it's in demand. So if you could, if someone gave you a choice, you can either have one combo where you're buying the August 197 call and selling the 197 put, or you could have 100 shares of the stock, and they're both the same price level. Which would you prefer? Well, most of us would prefer the stock because the stock is hard to borrow, and you can actually loan that stock out to somebody and collect interest. So how do they account for that? Well, what they do is they end up actually centering in their models. Instead of centering the stock right now, it's 197 bid. Instead of centering it at 197, they'll center it at like 196, something like that. And what that does is it adjusts for the fact that this is hard to borrow. Because we would rather buy, if we had a choice, if you think about things synthetically, buying a put and plus buying stock is the same thing as being along a call. But in this case, if we could either be long puts and stock or be long a call with similar prices, we prefer to be long the puts and stock because, once again, the stock is valuable here. It's hard to borrow. It's valuable. You can, if you're not like loaning it to someone else, you can use it as long as having long stock to be able to sell. Let's say you have a position and you need to sell shares against it. Well, if you bought puts and stock, then you'll have some shares to sell against it. So stock is always valuable. So that makes the puts more valuable than the calls. When we buy a put, we can buy a stock against it to hedge it, and thus the puts become more valuable. We'd love to buy some puts so that we could buy some stock to hedge them and turn them into calls. So that's kind of the way that works. All right, so let's go to UVXY. So UVXY, I came on yesterday and we started this new idea. What we were going to do is we were going to sell a naked call and sort of the at-the-money call, and then we were just going to wait. And if the and we were just going to wait until we get to expiration. And on expiration day, we're either going to let that call expire worthless, and we will have collected the premium, or we're going to roll it out to the next week. And we're just going to keep rolling it out on the same strike until it expires worthless. And in this way, we will be profitable in UVXY. So we sold one of the 24.5 calls in UVXY. I think we sold it for $1.67 yesterday. So if we look at that call right now, well, it's worth $2.67. So it's a $100 loser right now. However, I did kind of take to heart. I was listening to somebody in the chat yesterday, and they said, well, there's the Fed meeting tomorrow. Maybe you shouldn't be selling volatility into the Fed meeting. And so a little bit before the meeting, guess what I did? I bought that call that we were short, the 24.5 call. I bought it. I paid $2, and then after the meeting came out, I was able to sell a higher strike against it for a little bit better price. So essentially, what I was able to do is roll us up a strike, and we're still a loser on this because it's gone against us, but because I was able to make a spread where I bought our 24.5 call in and I sold a 25.5 call, we've collected some edge on the way. So we still have to wait till this goes back down to realize a profit, but we haven't realized a loss yet. And so let me show you the trade that I did against our position. Remember, our position was short one call. We were short this the 9 August 24.5 call. So this is what I ended up doing here. Let's find it. And let me get out of the way here. And we'll kind of try to blow this up here so you can see it a little bit better. All right, so if you look at, see if I can blow it up even more. All right, so if you look at the first line on this display, it's going to show what we did. So before the Fed meeting at 10 something, let's see what it says on here. I can move this over too. Okay, so at 10:20, why is this not moving? Move over. Okay, there we go. So before the Fed meeting, at 10:20 in the morning, I bought in our call, our 24.5 call, and I paid $2. So I was realizing a loss of 2 minus 167. So it's going to be 32 cents. So I locked in a 32 cents loser by buying that call in. But then I waited a couple hours and I sold out a dollar higher strike, the 25.5 call, for a 5 cents credit. So essentially we rolled up a strike, and since we rolled up a strike for a credit, you know, that vertical, if you look at that vertical right now, the 24.5, 25.5, it's worth, it's definitely worth something. Let's see what it's worth right now. So 24.5, 25.5 vertical is worth about 50 cents. And we were able to leg into it for a 5 cent credit. So you could look at that a couple ways. One way is you could look at it, instead of realizing a 32 cent loss, you could say, well, we actually, we only lost 27 cents. And so now we are short the strike a little bit higher. And I actually sold a second call there. So, we rolled up our risk one strike higher. And so we'll continue to monitor this. That little spread that I put on took a little bit of bite out of this trade, but of course, this has to go back down for us to realize for us to have a victory here. So if we look at the position right now, we're short 2 of the 9 August 255 calls. Right now, they're 224 bid at 228. We sold them for 205. And so we'll continue to monitor these. And what we'll do is we will continue to hold this short position until either the day before expiration, when we'll roll them out to the next month, or if they expire worthless. And there you have it. This is kind of, the reason I sold an extra call is because this was kind of a spike here that, and it was a good opportunity to sell volatility into a spike. So if we look at the chart here, I'm going to make this smaller again so you can see it better. But you can see that spike this morning. UVXY got all the way up to 28.29. And that would have been a good time to sell something else. Now, I know it's very scary to sell into a spike because you think the world's ending and stuff. But most spikes last less than a day. So there you have it. So I think that's a good trade to roll up a strike. All right. I think most people are probably busy with the close of the day, but hopefully you'll come on and check this out later once the day does close. And good luck to everybody trading BYND. Do check out Sal's video on BYND if you get a chance. It's really good information on the many ways why this is acting like a pump and dump. And, you know, the Fed cut. I really dislike listening to CNBC and those people talking about the Fed. They, first of all, they're very corporatist. And second of all, they, I don't know, the one person just really bugs me. I don't like Rick Santelli, and I don't like one of the ladies. Some of the other guys are fine, but those two kind of bug me. All right, well, I'm happy that my position, that BYND came back and didn't get away from me when I was short 100 deltas, because that could have really gotten away from me. Came back. Everything seems to be under control right now. And so the day ends and we'll move on to the next day in trading. So thanks, folks, for watching, and I will see you in the next video.